Good afternoon. It's Mike again of the Code to Trade, and this is just a continuation of the previous two videos on the ugly side of day trading. This is chapter 3, the final chapter, and what I want to do is just a quick recap on what this has been about, this chapter. And what you recall is the person I was talking to yesterday lost $450 of their savings. And sadly, it was because they were in the wrong position with gold. And even though they were only going to be earning 42 cents per pip, gold shot up in value so much that their account got wiped out. And sadly, they lost all their savings. But I feel it is sad because price is coming back down now. And I feel as though in time, they should have ended up in profit. I'm from the financial services industry, from anyone that is listening for the first time who does not know me. And what I was taught in England, and I was regulated in England for 20 years, is you only lose money if you close an investment. In time, price generally always comes back and you'll end up in profit. Now, yes, we're talking about this is day trading, in which case you can actually buy and you can sell. So, yes, an investment, if an investment falls, you would expect it to go back up again. So unless you close that investment, then you shouldn't lose money. But it's also the same for day trading. As price goes up, it comes down. As long as you're positioned in the market and you understand how the market works, then even if it is a short position where you're selling, then you would expect price would eventually come back down, providing it's a realistic price. It would come back down to where your position was placed, and you should end up making a little bit of profit. But sadly, this person yesterday lost their money. So let's go on to the charts now and see what happened. Now, then this chart is the hour chart, and this particular video is for my students who are part of the Code to Trade. So hello there. The previous one obviously was for the public. This one's for you, and this has obviously got everything on the chart to help us with our decision making. So the person who lost their savings yesterday, you can see where they placed their short. And I suppose looking at that, if you look at that, the fact that price it came through the Bollinger Band, maybe I can understand why this person placed a short, but the way I look at it is the price hadn't passed through the 8 moving average. So all the way up here, the price had not moved through the 8 moving average. Now it did move through the 8 moving average here, but as you can see, there was a rejection on the 20. So let's just put a trend line, blasted cockles, put a trend line there, just see why did price stop here. So let's go on a 4-hour chart. Now on the 4-hour chart, it would have been because it wasn't ready to go through the 8 moving average on the 4-hour chart. So because it wasn't ready to go through the 8, the natural progression is the price was going to go up. So really, I think the person who lost the money yesterday, they were not patient enough. They should have been more patient. They should have waited. And they would have realised, yes, price was going through the Bollinger Band. And as you know, I've already got some short trades in. Mine are higher up. But sadly, the person who lost the money yesterday there was indications on the charts that price was not ready to go down. The 12-hour chart, you can see here, it's a strong, it's above the 8 moving average. Yes, it was actually struggling off the 150 there. And it struggled twice, but then it went through the second time. Then it struggled on the 200. Then it passed through the 200. So I can kind of understand why the person thought price was going to go down. And as you know, I've already got a couple of trades in on a short. So let's just see whether mine come down. But that kind of, I think you understand enough now to see for yourself why the trade that this person's lost $450 on, it was a bad trade. You can see here on the daily chart, price was coming through the 50. So it actually tested the 50, 1, 2, 3, fourth time went through. And then there's a little bit of a dojo, but no attempt to go back under, none at all. So even that there on the daily chart, you wouldn't be placing a short. You'd be wanting to place a long. And the only reason why I placed my shorts a little bit further up here is because it was close to a strong support, and I wasn't expecting to go through the support the way it did, but I obviously didn't predict what was going to happen in Iraq and Iran. If that hadn't happened in Iraq and Iran, then maybe we're looking at something totally different. So anyway, that's that. I'm sending you separate videos on the trades that I've placed. I've already got them videos put together. So the trades I placed, I took profit last night and this morning. You're going to get them in separate videos with obviously everything on the chart to help you understand why I placed the trades, why I set my take profit target. So this is just a shorter video for you. I hope you found it beneficial. It's not nice when people lose savings, but this is the ugly side of trading, and this is why you have to be so cautious, and you have to make sure that you are following a code to trade. And as you heard in the video, it doesn't have to be my code. You may come up with your own code, or you may have found one on the internet. If my code's working for you, which appears to be, I am very, very happy with that. And I'm looking forward to seeing you all again and working with you in the future. So happy trading, and I will put this on the website now. So this one is for you, and I look forward to catching you in the next videos. Bye for now.